I'm Owen Bigland. This is the Inside Edge video blog. Okay, it's Saturday, so I'm going to share with you guys, I get a lot of stuff that comes across my desk here. Subscribe to the Wall Street Journal. I've got a Forbes magazine. I've got a Barron's magazine subscription. And then I get a lot of newsletters. I've got a few good friends in New York, as you guys know, in the financial business, that will send me some good newsletters that they receive that they think I might enjoy. So this is a private equity guy based in New York. I don't know, probably has 10, 15, 20 billion dollars under management, so not too bad. This was just to give you a quick little synopsis here, because he was talking about the stock markets as I'm doing this blog. The S&P 500, the NASDAQ, even the TSX were, treading fairly close to all-time highs. We've had a little bit of a pullback here recently, and moving into the fall, I'm expecting some 5 or 10% corrections here. They're only a matter of time. It's been a pretty strong run here since the depths of COVID last March 2020. My portfolio is up well over 100% across the board. I've got some stocks that are up well over 200% from March of last year. But I'll just share a little comment section that he had in here. No one knows how the market will perform going forward, other than it'll go up, go down, or stay the same. So don't try and guess or time a market. Rather, pick a stock or a bond allocation that works for your specific circumstances. Then create a diversified portfolio of low-cost stock and bond index funds, or ETFs. Dollar cost average new contributions, rebalance when your actual allocation differs by a few percentage points from your target allocation. Don't panic when the market tanks, and it will tank at some point, and then it will recover at some point. That's it. Stick with your plan, and your portfolio long term will perform very well. So I'm coming up now to about 25 years in the equities market. My first share, I've talked about it before, was 25 shares of Pepsi Cola. Still own it today, and I've added to it many, many times over the years. I can tell you that this is what I've been following, and it has performed very well. It will work absolutely fantastic for you. Buy on the dips, don't panic and sell, just hold good quality companies. They're going to continue to pay you a dividend either monthly or quarterly. Just keep reinvesting it. You're going to do fantastic. Trust me on this, because I'm living proof of it. I have to pinch myself sometimes when I look at the value of my portfolio and what it was just 5, 10, 15 years ago. It's that snowball effect. You can translate the exact same thing that he talked about here with real estate, especially Vancouver real estate. Buy a high quality home as your principal residence, live in it, enjoy it. Take advantage of the principal residence exemption. Take advantage of these ultra low interest rates we've got. You're creating equity two ways. You're paying down the debt and doing tremendous amount to the debt every single month. I always tell people, go on to calculator.net, look up their mortgage calculator, have a look at what 1.2, 1.3, 1.4% interest rates are doing to the principal every month, right from day one. You are destroying that principal right from year one when you're paying sub 2% interest rates. And then, of course, over the long term, not every year, you're going to get some nice appreciation on that home. After you've maxed out your RSP and TFSA and you've got a good handle on your retirement funds, hey, maybe buy an investment property. It might be right for you. Take out the leverage, diversify your portfolio, put a tenant in it, and let them do all the heavy lifting. Couple other things here, just quickly here. Boy, I love the Canadian banks. If you guys watch those Questrade commercials, I've talked about those ones many times, where they're talking about the low fees have made a huge difference. You're not still using mom and dad's guy, are you? Who's charging you the 1% and the outlandish fees. Well, they've done a tremendous amount of damage, as has a guy like Jack Bogle with Vanguard, on just index investing through low-cost ETFs. Vanguard or iShares through BlackRock. They have been devastating, absolutely devastating to these managed mutual funds, charging you, 200, 300 basis points. Or even a lot of these money managers charging you 1% a year to manage your portfolio. The facts don't lie. These active money managers cannot consistently beat the index. So why pay for the underperformance? Now, I just saw a commercial from RBC, and listen, I love RBC. I own a ton of Royal Bank shares, as I do with TD and all the big banks. They're a license to print money. Everyone should own the Canadian banks because they make a tremendous amount of money on their management fees, on their credit cards, and everything else, commercial lending and mortgages and everything else. So own the Canadian banks. But I saw a commercial here where the couple sitting on the couch, they're trying to copy the Questrade commercial, but in reverse. She's looking at her portfolio and look at how my portfolio has performed. And the boyfriend is like, how do you outperform me with my low cost fees? And the thing was, well, maybe my guy was right. Low cost fees aren't the only thing to consider. Well, this, I had to get a good laugh at that. Don't buy it. Listen, an active money manager or an actively managed fund, for sure, 20% of them every year will beat the index. Out of every 10 funds, 2 that are actively managed can beat the S&P 500 or the Triple Q or whatever index you're following. But they cannot do it consistently. And the 20% that do it every year just very narrowly beat it after you deduct all the fees. And they cannot do it year in, year out for decades at a time. They can't. If someone can show me an actively traded mutual fund that's charging you 150 or 200 basis points that has consistently outperformed the S&P 500 over the last 2 decades, let me know, because I'll buy it. But they're not out there. I talked about that PBS Frontline documentary that came out a few years ago. The facts don't lie. Jack Bogle, the late founder of Vanguard, has written books on this. Most people will be better off just buying an ultra low cost ETF, buy the index, and just keep reinvesting the dividends and sit on it. And that will outperform 80% of the actively managed traders out there and actively managed funds, minus all the fees that they're charging you. But hey, I give RBC credit. Why not? They're getting killed here on actively managed stuff. But I don't know. Don't buy into it, folks. Go with the low-cost passive route. You will come out way ahead after. Because remember, retirement isn't about 1 year to the next. Maybe this lady's financial planner somehow, by some miracle, was one of the top 20% that year and eked out a 0.5% better than this guy's low-cost passive portfolio. But they're not going to do that year in and year out. It's impossible. Not going to happen. So don't buy it. Final thing I'll just talk about here, and I'm going to do some blogs on this later this fall. I'm looking forward to this. I got an invitation to a speaking engagement by Bob Rennie, the Condo King. I've talked about Bob Rennie many times over the years, and I'm looking forward to it. It's been a few years. Bob has been laying a little bit low here. This is an invite only through the real estate board. He hasn't been doing a lot of public speaking lately, but this is a guy that I've talked about many times. A guy that when I'm invited to listen to him talk for an hour and a half, I'm going to clear my schedule. As a matter of fact, I'm up in Whistler. I'm doing a mountain biking expedition up there during that time. I'm going to clear my schedule for the morning and take in the mountain biking later to listen to Bob for 90 minutes. This is a guy that I pay attention to. You know, I always talk about who to pay attention to and who to ignore. Well, most of the guys you read on the media, ignore all of them. These anonymous bloggers on YouTube that aren't in the real estate business or are very inexperienced, ignore them. Pretty much all economists. Some of these guys they roll out on BNN, they dig up. You know, one guy was saying, a couple of the guys they get on BNN, these economists, is one guy, he's predicted 23 of the last 2 recessions. And that's totally true. You know, they're just guessing. They're throwing darts at this stuff. Bob Rennie, as I've said many times, he's a guy that I pay attention to. Why wouldn't I? This guy is privy to a lot of inside information. You know, he has his own brokerage, and he, of course, has his Rennie Marketing. So he is privy to thousands and thousands of transactions every single year. And in the past, and I don't know what this talk is going to be like, but in the past, I have gained some incredible insight from him. Remember, I talked about it. I've talked about it a few times. One of the first times I listened to Bob Rennie was at a Board of Trade conference about 20 years ago. 20 years ago. And everyone was down on Vancouver real estate. That was back when you could buy a condo. It was outrageous. $300,000 for a Yaletown condo. You got to be nuts. Way overpriced. Bob Rennie was the first guy that started talking about an equity-driven market, people riding the market up. You know, he would go into great detail on what was selling, what wasn't selling, what young buyers were looking for, the neighborhoods that they were buying into. Were they looking for luxury appliances or more location? You know, if you're going to listen to any guy, he's the guy. He's privy to thousands of these deals and insights that 99% of the people do not have. Actually, probably nobody has the insights that he has. So I'm looking forward to him, and I will definitely do a blog on this. I'll let you guys know some of the things that, some of the takeaways. Again, I don't know how much he's going to reveal. I've noticed that he's backed off a little bit for, you know, whatever reason. Bob Rennie, he gets a lot of criticism, unwarranted in my opinion, being the condo king. There's still a lot of people somehow that think he's responsible for Vancouver prices being so high, which is, you know, just a joke. I mean, he's a marketer, he's a salesman, he's like me. I sell homes. I'm going to represent my clients. In his case, it's the developers, and I'm going to sell these properties. But he has a lot of insight on thousands and thousands of deals. Who is buying these condos? What is the down payment? Where are they getting the down payment funds from? What are they looking for in a condo? Are they buying 1 bedrooms or studios, or are 2 and 3 bedrooms selling better? How does Vancouver compare to Brentwood as far as sales volumes? These are all fantastic things. Where does he see the market going? I mean, he's always thinking long term, which is the only way you should look at real estate, long term. You know, I remember him saying many times, you know, I don't know what the market's going to do next year or the year after that. But I do know in 10, 15, 20 years, Vancouver is going to be every bit as desirable as it is today, and probably far more. So I'll give you guys an update on that later this fall. And I'm looking forward to hearing him, because I haven't attended anything from him for a couple of years now. I'm Owen Bigland. As always, have a good weekend. I'll see you next week.